80, 88. Support below at 54, 48, 38, and 31. Pivot 61. Support 54, 48, 38, 31. Resistance on the upside 67, 73, 80, and 88. All right, the market here is kind of going nowhere fast, but this is what we expect with these kind of markets. They're kind of consolidating here a little bit to see what the next leg is going to be. Is it going to be up? Is it going to retreat a little bit? Technical look, maybe it's flagging here a little bit if you consider that over the last couple days. But obviously a very narrow range. We're what, maybe 10, 15 ticks, points. You got to remember that, when markets rally like this, the volatility is sucked out of the market, and traders trade on volatility. We had just have 100,000 here traded overnight, a very, very thin and light trade. So that's not a lot. Just over 150, something like that. So very, very thin light, but in lieu of where we're at and how the markets are trading, that's what it is. We can't inject volatility for our own sake to be able to get opportunities to trade, and everybody here has to show some patience, pick your spots, and kind of let the market come to you instead of you going out there and trying to create trades. Welcome to some of the new folks that are here. We are trading mini S&Ps. We don't believe markets go straight up or straight down. Consequently, we're trying to find these areas of inflection where the market will rotate and give us a chance to scalp the market. We believe that we can probably take about 2 or 3 points on these trades at this point, as we quickly come up here to our 67 area. All right. And we come up here to the 67 area, see what it wants to do. So anyway, the point is that we're trying to find these levels of inflection to give us an opportunity to scalp the market. 2 to 3 point stops right now would probably be doable. Again, just keep your stop in there because you never know what these markets are going to be trading on or looking at or trying to trade off of. Everything is kind of, dependent on volatility. And sometimes they can inject volatility in the middle of the day for whatever reason and trade around it. And it is what it is. So keep your stop in no matter what. It's always been the case. It's always been a thing that we talk about here more than anything else. All right. If anybody has any questions, please feel free to jot them down in the chat box area. We like questions. We want to make sure you understand what we're trying to do and the concepts and ideas that we have here. And if you look at the chat box area, for some of those of you who might have missed the levels, if you look at the chat box area, you'll see the levels imprinted in there. And those are the levels that we're going to use as a guide to the day. We can add to them, subtract from them. We make additions, subtractions from them. We use them as a guide. We also have price action opportunities that occur once the market paints some bars. And in addition to these levels and then the price action opportunities, we have the opportunity to put some setups in and trade. So that's what we're trying to do here on an everyday basis. We trade mainly mini S&Ps. I believe that focusing on one market gives you a better idea of what that market is looking for, how it trades, what it trades off of, and so on and so forth. So these are that's what we're trying to do here, is trying to focus in on keeping you abreast on what the market is doing, our market versus oil or other markets as well. But as far as our education course is concerned, if you take the concepts and ideas that we teach, expand them to other markets, they will obviously do a good job of helping you in those other markets as well. The whole concept here is to take the different ideas of trading. I mean, I learn from traders every day, and I kind of incorporate them into my trading scenario, and that's what traders do, right? You learn and you continue trading, and that's what we try to do here. We try to add to your things of concepts and ideas that you might be trading off of as we nicely come down here to our 65 area to give us our quick 2 points. Again, we're scalping the market, so we look for 2 to 3 points in our trades. Obviously, we came down here and got a nice little trade here off of our 67 area. So it's another nice way to start the morning. And kind of been doing okay in the morning here lately in these little tight ranges. And remember, take what the market gives you. You know, I know there's a little frustration sometimes in wanting to trade and not being able to find trades, but you know, you have to accept the market volatility, whatever it may be. I mean, sometimes it could go crazy and nuts. Other times it could be slow and monotonous. We are in this latter part here of the situation, but hey, it is what it is. As long as it gives us a couple opportunities during the day, we can't complain. And again, we have a nice little quick scalping opportunity here against our first resistance level here at 67, and a nice rotation off of that to give us a quick 2 points. And now we'll just wait and see. Next level on the upside we have is the 73 area. We do this on an everyday basis, and we're just kind of trying to find these areas of inflection, because sometimes it happens, sometimes it works. I mean, like I said, listen, you know, we're so used to markets going crazy and having these wide ranges, and but I can remember that you know, when we had S&Ps, when you know, they were trading in the not 4 digits but 3 digits. You know, if we had a 15-point range in the course of a day, that was great. You know, everybody here has been spoiled with the volatility and the fact that the S&Ps are trading at a 4,000 level, not a 3-digit level. And so when you get a you know, 10-point range, 15-point range, you're all like spoiled. But we used to get 10, 15-point ranges in the course of a day, and that was good. That was a lot of work. Take things as it comes, and also understand that we will get volatility back at some point. You know, because nothing is always hunky dory and everything's perfect like right now. And things are not perfect, but they seem that way. The market likes it. All the news that's coming out, positive for the time being. But as you know, those don't stay that way. All right, let's. So we had a nice rotation here against our first level of resistance. Again, if you looked at the chat box area, for those of you who might have missed them, the chat box area is going to have our levels that we gave out at the start of the day. There they are for you. And you can use those as a guide. Like I said, we can add to them, subtract from them. We can delete them. We can whatever, depending on what the market does. Again, we're always susceptible to market volatility and movement. So having them as a guide helps. And that's what we try to do here. Let me see here. Okay, we have no fundamental news coming out this morning that's going to interrupt us. I think yesterday we didn't have anything either. So yeah, it's kind of a quiet a week so far as any fundamental news is concerned. Let me see what's up for the rest of the week here. Today is the 7th. Yeah. Jobless claims is tomorrow, and then wholesale trade is on Friday. Yeah, very, very light week, you know, on the heels of the unemployment number that came out on Friday. So that's fine. But we do have a lot of Fed speaks today. And Fed speaks are the governors from the FOMC committee who are going out there giving speeches on economic monetary policy. And those sometimes could affect market rotation. Surprisingly, sometimes when we don't understand why the markets are moving, right? I mean, not everything is always, a 7:30 number or an 8:30 number, and 9 o'clock number, and at least sometimes when the markets are moving because there's a number to be released at that particular moment in time. But during the course of a day, so we have a lot of Fed speaks, and today at 10 o'clock there's a Fed speech. Kaplan's talking, and then at 11 o'clock, Barkin is talking, and then at 12 o'clock, Daly's talking. At 1 o'clock Chicago time, FOMC minutes are going to be released from the last meeting, and that could be a little bit of significant kind of this situation, depending on what they say in those FOMC minutes. But usually it'll coincide with the release of the FOMC decision and the commentary that they put out. So unless I think what they look at when they look at those FOMC minutes is the voting and how many voted for whatever policy they were issuing. That could have a little bit of effect on the market more than the speeches. But again, the speeches could have an effect, but we can't really be mindful of that every time. But at least that keep your stops in there at those particular moments in time. That if you do get some volatility in there, it's mainly for a reason, and at least you know why. But the FOMC minutes could be somewhat of a market mover. So at least we know that that's going to be released at 1 o'clock Chicago time. And so be a little bit mindful of that and careful of that if you're trading by then. As some of you know, because you were here yesterday, we focus more on the morning hours to trade. We like the morning hours for the whatever volatility we're getting these days. I think it's going to be more concentrated in the first couple hours of the day versus like late afternoon. If you were watching yesterday late, I mean, it got really slow. I mean, yeah, it did get slow, but you never know. You get always some movements, and then you're always probably caught on the wrong side sometimes when those moves happen, especially at the end of the day, because at the end of the day, they're going to get more one-sided trade than anything else. So careful when it comes to that situation. So no economic reports, a few Fed speaks, and then at 1 o'clock Chicago time, possibility of maybe some movement. We'll see. All right. No problem there, Peter. Right now, we're scheduled for a class on Thursday. I don't know if you'll be able to make it or not, but that's our next scheduled class. If you need time to schedule, make some change some things or not, but we will have a class on Thursday. If not, don't worry about it. We'll work it out. And anyway, things are slowed down a little bit, so it is what it is. But no worries. For some of you who might not know, we do our education course in this venue. We use live charts to discuss our different methods and methodologies and ideas and concepts that we employ every day. and we focus in on the charts. We kind of close everybody out here in the late afternoon, like at 1 o'clock. Remember, we focus most of our trading is done in the first couple hours of the day because, like I said, there's good ebbs and flows. Obviously, when there's more volatility and more action, if that's the right word, we trade longer. But summer days are here, and whatever. Obviously, if things require we need to stay here longer because we get some movement in the markets, hey, we're here. We're not. We're definitely. You're talking to a person who, or you're listening, I should say. You're listening to a person who loves to trade. It's very difficult for me and to tell people not to trade because I'm the one person that here who, when I was standing in the pit, I always had a position on no matter what, just because of the fact that I was standing in one place and trading with whoever standing next to me most of the time. But there were times where nothing much was happening, and you had to be patient and wait for volatility and movement. But it's. I understand it's hard not to trade, but you have to pick your spots. You have to be patient, and you have to let the market kind of develop an opportunity or setup for you. To try to go out there yourself and try to create opportunities is very, very um, tough to do, and probably at the end of the day, not going to be profitable. Which again, here is the objective here is to be profitable, right? I mean, you want to make money. You don't want to just trade for no reason. So that's what we're trying to do here. So again, I stress over and over again because this is the world we're in right now. Is the opportunity to trade, but then again, you have to just understand that when markets are slow, your opportunities are going to be lessened, and you need to be patient. That's it. All right. So let's see here. Again, if anybody has any questions, any comments, any want anything, just put it in the chat box area. I can see those. I have the chat box up. We can talk. You don't have to put it to everybody. If you just put it to panelists, it'll just come to myself and Brad will see it. Everybody, nobody else will. So keep that in mind. And that way, you can do whatever. So it is what it is. So we had a nice rotation here off of our level there at the 67 area. We had a nice 2-point rotation, and now we're just kind of hanging up here towards the highs here. So we'll see where it wants to go from here. Patience is very important, and it's a really good time for people to ask questions as far as what we're trying to do. As you can tell, there's not much going on. The next level of resistance we have is up at 73. Our first support level, a good support level, would be around the 62, 63 area for the time being. But again, that could change, right? So, but for the time being, that's where we're at. All right. So we're up here at the top end of this, kind of hanging up here at the top end of the intraday range. Next level of resistance we have is up at 73. Again, we have a little support rotating back down to the 263 area. And right now in the middle, we call this the no trade zone, right? That's where we're at. U.S. stock index futures wavered between slight gains and losses overnight, as with the Dow and the S&P drifting near record highs. NASDAQ are not far behind. Wall Street took a breather on Tuesday and could be in for some more restful days, according to some data Trek research company. We've had a strong start to the second quarter, and it totally is reasonable to think that we're going to basically hang out here as the market digests what has happened. Earnings season is coming, which has to be strong, and forecasts need to be bumped up. We're also going to see a GDP number for the first quarter later this month, although things are going to factor into whether or not this latest rally will be sustainable. When is the first quarter GDP coming out here? Let me see if I can find that out. It's Oh, that's not going to be till the end of the month, so we had nothing to worry about. But this guy's really expecting a lot of action. It's waiting for a GDP number to come out at the end of the month. Okay. Bullish economic news wasn't enough to energize the market on Tuesday, despite some great figures. Job openings rose, hitting 2-year highs. Minutes will be released today from the Fed's last meeting in March, when the central bank upwardly revised its economic projections and telegraphed that interest rates would likely remain at near zero levels through 2023. The minutes could provide some clarity as to how committed the FOMC is going to keep rates low, and how members might change their policy rate views if the upbeat forecasts for growth, jobs, inflation come to fruition. While the meeting will be in particular a note to investors, remarks from Jay Powell tomorrow may offer a more timely view of the central bank's policy thinking. Great, we're going to have an F day tomorrow. Nothing like having an F day tomorrow. I don't know where he's talking, but he's talking, I guess. All right, well, good F day tomorrow. F day standing for Fed. We don't like the Fed. We don't like to trade Fed stuff. It's just not good. Not good for not good for anything. Too much volatility and uncertain. We stay away from Fed days, like FOMC release. Well, when they release their decisions on anytime where there's a Fed talking, it's just not. We don't like Fed stuff. I'll save you some money. How's that? I'll just say that. I'll just put it that way. All right, market is kind of just looks like it's flagging up here a little bit, looking maybe to go the next step up, or maybe it'll go back down to support level. We don't know, right? We just don't know. This right now is a no trade zone. That's what I like to call it anyway. Unless you have a position on and you're hoping we get the next leg up, or hoping we retreat, I cannot tell you because I don't have no idea. All I know is it's a no trade zone for me. President Biden announced Tuesday that all U.S. adults will qualify for coronavirus vaccine by April 19th, moving up his eligibility timeline for the general population by about 2 weeks. In addition, there will be vaccine sites within 5 miles of where people live, while the number of pharmacies contributing to the federal pharmacy vaccination program would increase from the current 17,000 locations to 40. So far, COVID-19 has killed more than 555,000 people in the United States, the world's highest record coronavirus death toll. There is a lot of good news, but there's also some bad news, he said during his visit to a vaccine site in Virginia Technological Seminary in Alexandria, Virginia. The virus is spreading because too many people who have seen the end in sight think that we're at the finish line already. Let me be deadly earnest with you. Are we still in a life and death race against this virus? The United States has been outpacing most of the world in vaccine rollouts, especially given the size of the population, placing itself in the best position for reopening of the economy. The pace of vaccinations has even increased to an average of 3.1 million per day administered over the past week, from about 1 million doses per day when Biden took office. At that rate, it will take an additional 3 months to cover 75% of the population, also known as the herd immunity number. So I guess, some good news in that thing. Yeah, I would tend to agree with you there, Maureen. Doesn't change the fact that it's still bad, and we all have to be careful. Well, well, we'll see what happens. Can't argue about everything. Just it is what it is. All right, we're just kind of hanging up at this upper resistance area, 67 area. Again, like I said, no trade zone for us. We had a nice rotation against it initially, and now we're just kind of hanging here. And again, I can't emphasize enough how you have to be patient and wait for the opportunities to present themselves. Anything I say or do, like where support levels are, where resistance levels are, what price action opportunities might occur, is a taught experience. We're trying to expand your horizons here a little bit. If you've been trading for a while, try to add some new concepts and ideas to your portfolio of trades. And if you're new to this business, we're trying to, give you a methodology that can keep you profitable, at least give you a chance to be profitable, and then and try to understand why markets are moving. At least I'll try to explain it as much as I can, if I understand it. And sometimes I don't even understand it, but it is what it is. So we do offer, and then we have the trading room. So we have an array of different things here in this trading room that you've joined us. Again, welcome to some of the new folks that are here. And if anybody has any questions, chat box area is where you should jot them down. I have that window open. I can see it quicker. Forget about toilet paper, hand sanitizer, and semiconductors. Restaurants are having trouble securing enough ketchup. Who would have thought? With the COVID-19 pandemic turning many sit-down restaurants into takeout businesses, packet prices of ketchup have risen 13% since January of 2020, according to the restaurant platform Plate IQ. Some stores can't even get their hands on enough condiments, Wall Street Journal reports. Who knew? with managers using generic versions, dishing out bulk ketchups and single-serving cups, and seeking secondary suppliers due to demand. Ketchup is the most used table sauce in the United States, logging $1 billion in retail sales during 2020, about 15% higher than it was in 2019, according to 300,000 tons of tomato condiments were sold in the restaurants last year. A recent CDC directive could be exacerbating that situation. As restaurants and bars resume continued operations, avoiding using or sharing items that are reusable, such as menus, condiments, and other food containers, reads the guideline. Instead, use disposable and digital menus viewed on a cell phone, single-serving condiments, and no-touch trash cans and doors. Wow. How is the Ketchup King handling the situation? Heinz, Kraft Heinz, holding nearly 70% of the U.S. retail market of a condiment, but it was caught off guard by the pandemic. Restaurant need patience while the company ramps up supplies. We're busy doing everything we can. Who would have thunk it that ketchup would be a problem? Well, who would have thunk that toilet paper was going to be a problem too? But, that's another story. All right. Market is trying to turn over here a little bit. I don't know what it wants to do. Just want to stop here, go back up. I know 61 to 63 is a little support area. Very, very choppy little trade here. If you're aggressive, you want to take that level. Otherwise, the next good support we have is down at 54. All right, just kind of floating around here. Thought maybe it would go down a little bit more, but it didn't. Our settlement price there is a 64 area. If you're a little aggressive, kind of just hanging around here. Again, we do need reasons to trade. We focus on that concept more than anything else because we believe it's important to have reasons to trade, not just jump into the market because you feel like doing something. Can't stress that enough lately, only because everybody here, like I said, is kind of you're used to that craziness and moving around. Markets are giving you opportunity. and it's not happening as much anymore, and you're a little frustrated. And the only reason I keep focusing on that is because I'm getting some texts and calls from people. And some of you have never traded when the markets were really, 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 really slow. This is still moving around. Where's the VIX? Can somebody tell me where the VIX is this morning? Where are we? Definitely at a 17 handle, or did we creep up there to 18 again? 1785. Yeah, well, that makes sense. But like I said, you could see here over the last couple of days how we've gotten really into a little tight range. Trying to just see where it wants to go next. We just don't know. We just have to be prepared to trade. If a level comes to an area where we think there's some resistance, or the market comes to a level where we think there's some support, we have to be able to, or ready to try to take the opportunity. And in the middle here, again, patience is how you make money, and then take advantage of whatever opportunity is there. And like I said, sometimes they're going to work, sometimes it's not. We just don't even know. So I wish I could give you like a better idea of what's happening here, but I can't. It is what it is. But on a different note, though, if you are interested in trading, or you need more educate, this is a good time to learn, because things are slow, and we can definitely have time to. That's one thing we do have time to do, because of the fact that we're not moving around that much, and we can explain things and have time to explain things. So, in that sense, I guess there's always some good to something. That's all that matters. All right, we're just kind of hanging up here. Again, looking next level on the upside. I thought maybe we could get down to the 63 area. Got down right down to 64. If you're a little aggressive there against our settlement price, if you did, it got down to six and a quarter against the 64, the 4.25 against the 64 settlement price. If you were a little aggressive, maybe you got in there. If you were looking for a trade, obviously you'd have to scale there and 63 and all the way down to 61. But if you did take it and you did get in, nice trade. Don, just put your order in. If the market, put your I guess if you get a fill, it'll ding or something, or let it play you a song, and then you can wake up and start trading again. Well, wait till it gets filled. Don has to go out and do something on the farm today. He's not happy. He's not happy with the market not moving. Not happy today. Sorry, man. Wish I could tell you. Yeah, wish I can. I did give you a little trade down there at the settlement price, but you had to be. You had to be a little aggressive. I was looking for 63. Maybe you scaled in there. Who knows? Um, welcome to some of the new folks that are just coming in. We trade mini S&Ps here. If you look at the chat box area, hopefully you'll be able to find the levels. There they are for you. And those are the levels that we kind of use as a guide for the day. We can add, subtract to them. Our first resistance area there at 67 gave us a nice little trading opportunity to start the day. And we have kind of settled in here in a little bit of a range. And the next level of resistance we have is up at the 73 area. We had a little bit of support down to the 63, 61 area. A little bit ago. But I don't know if, I don't know what'll happen now. We're just kind of hanging here. Next level of resistance we have is up at 73, and still support would be around the 61 to 63 area, at least for the time being. We are scalping many S&Ps here, trying to find opportunities to take advantage of the market's ebbs and flows, finding these areas of resistance or support to give us an opportunity to trade. Because the markets have kind of slowed down a little bit here, on these rotations to the upside. Also our trading, a number of trades that we expect in the course of the day is also you have to kind of keep that in mind and know that maybe they're not going to be happening as often. Whatever, you just have to take whatever the market gives us, trade it accordingly. We like to average about 4 to 5 trades during the course of a day. And we probably do average 4 or 5 trades during the course of a day over the long run. Obviously, yesterday we had a couple trades and they were nice. They worked out for us. Today we've had one so far. It was a good thing that we got one. You guys, we could have none, right? We could have none, but we had a one opportunity. So let's not, complain about it. And even if we lost money on it, at least it was we traded, right? But right now we're kind of just hanging up here, and this is where we have to show some patience and wait for the market to give us a chance to trade. So if anybody have any questions, feel free to ask. We like questions, don't mind them at all. Next level of resistance we have is up at 73 area. All right. Yeah, we're just stuck here in a little bit of range again. Patience is important. All right, we kind of talked about some of the expectations. Remember that there's going to be some Fed speaks today. They're going to be chit-chatting away. That could add a little volatility to the day. We never know. We can only hope. Up here, we have is up at the 73 area. I don't know if it will or won't, but it's trying. And again, just remember, just keep your stop in no matter what, right? I mean, we are not going to love a trade because we're given a trade. We have to work a trade sometimes. So that's where we're at right now as the market tries to inch up here a little bit. Like I said, the next level of resistance is up at the 73 area.
able to see my face.
Oh no, that's not it. No, 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 no. No, I can say whatever I want. He has no idea that he can hear me.
Hey, Jonathan V, welcome aboard.
Let's hope that doesn't happen.
Hey, Ness, appreciate it. Wanted to welcome some of the new people coming in today as guests. Welcome aboard. We're here every day. Normally, we're live from the trading pits in Chicago. Saul Shul, who you were just listening to, is a CME Group floor member. He's actively scalping the S&P 500 E-mini, as you might have noticed. He's also teaching and mentoring traders how to trade like he does based on his price action entries, exits, and stops. I know the market's a little quiet today. I think it's been a great trading year so far. And I think last year was stellar when it came to price movement and momentum and follow through. And I also believe that the market coming into, I guess it's the half of 21 already. Right now we're at April 7th, 2021, which I can't believe. I can't believe we're in that we're in 2021. So there's a number of opportunities here. One is to come in on a daily basis and be part of Saul's world. Two is to get set up like Saul based on his charts, the simplicity of his charts and the directness of his charts. A lot of times we get distracted as traders based on having too much to look at, too much to absorb, and we sort of get, I don't know if the word is verklempt, but sort of twisted up, and we end up not making money for that particular trading day, and then the series of days that follow. What we like to do here is strip everything down. You know, Saul always mentions that he doesn't want to change you based on your trading, but what he'd like to do is help you develop a skill set and a focus to come away on even days like this with an opportunity to have banked your money for the day. I always say if you're not done by 12 noon, talk to us. What I mean by done is having banked your money for the day, no matter how much money it is. You know, there are individuals out there that have been part of Saul's mentoring and his coursework that look to come to their screens on a daily basis, and depending on what the market is giving, you know, they may do one or two trades. They may also face a period of time when the market isn't behaving. And what I mean by behaving is that the market is wild. It's not, it has, so that leads me to Saul's proprietary. Saul believes it gives an advantage to him over other traders by setting these levels. Putting up the service around 9:15 when it comes to where the market may how they impact the trading profitability, see how the market behaves or changes. Have what we call momentum price movement. His levels are going back to his pivot. Levels are valid or not valid based on price movement and action. But it gives you an advantage over other traders because you have it solved as an opportunity for you as individual concept of and how to a number of moons ago quickly. And after some failure, it's on remembering that we're crammed into an area, and he looks to bank his money for the day, and then he stops because he has made his money for the day. And then he comes back with a clean slate and looks to do it tomorrow. If he's had a bad day trading the day before, he looks, but he's a human, right? He looks to shut it down and then just, work on the clean slate coming into the next morning without any predetermined ideas of where the market is going, coming in fresh, setting his levels, looking at the trading day after the opening bell and assessing that morning's trade or this morning's trade, and he'll do it again tomorrow morning. So Sol is a pro when it comes to surviving and excelling against other traders and adapting to the transition to electronic trading and what electronic trading has to offer, but he has kept his core when it comes to his price action trading methodology and the core of setting his levels. And I think that that's also critical here, is if you're going to set your core, in other words, if your core is where your bread and butter is, keep your core. Don't get twisted up by modern, not modern. What happens is, and what has happened is that trading software has evolved into something that's pretty darn exciting when you look at it. It's like opening up a business and going, okay, I got to learn all this stuff to figure out what to do to make money. And the reality of it is it really is in my humble opinion, a false friend, because you learn all this stuff, you apply all these charts, you develop all these charts, you work in all these indicators, you have all these times and crosses and moving averages and Fibonacci and market profile and all these things, Japanese candles, all rattling around in your head. And if you look at your screens, it looks like a Picasso with all this modern tech art. And you have the news on, and you have, I hope you don't have CNBC on, but you have some sort of a news service. So Edwin, that is a no. If you end up a student of Sol's, and I think I mentioned this, so what is happening based on the market at this point in time, adjusted and tweaked based on your trade. Think about active trading is pretty darn easy on the cusp. The wounds from that, whether they're mental wounds or the little aches. We're trying to help the critique of that trade so that you can do better on the next one. You may not do better on the next one, but then you get a critique on that trade. What did you do good? What did you do bad? What can you work on? What to work on? Let me know how you made out. Instead of looking in the mirror and deluding yourself because you're the only one there, as the owner of your trading business, would you send yourself out to receive the right training? And in this case, standing on the soldier's shoulder of somebody like Sol to get a leg up? Or would you fire yourself as a trader because you just stink at it or you just can't get it? There's that route too. You're the boss. Think about it. You're the boss of your own trading business. Would you hire yourself to trade? And if you did you come preloaded with the ability to trade, or do you have to get some training and get some? And it's interesting because there's a lot of ways to get some training: videos, trading courses, trial and error. In this case, you have somebody that is not only going to teach you in private class, but is also going to be able to stick with you over a year as you are getting better at your craft and narrowing it down so that you're better at your craft, helping you switch little things. I always say that a trader comes in that's been trading for a while really only needs some attention, some tweaks, some support in those tweaks, some confidence building, shedding some of the crap that you've come to rely on, and then focus in this case on Sol's levels, focus in on the actual trade, and then how you can get in there and wrestle it for a period of time as a family.
To troll and not have any. We are traders. This is not a 9-to-5 job, and you get paid. You have a check that comes in at the end of the month or the end of the week or bi-weekly, whatever you get, however you get paid. You are trading, and this is you have to accept the fact that sometimes we're going to be busy, sometimes we're going to be really busy, sometimes we're not going to be busy, and sometimes we're even going to lose money. Because it's just the nature of the beast. And you have to, I have no expectations coming in every day as far as volatility or how busy I'm going to be. Obviously, sometimes when there is some craziness that happened overnight, or obviously when we were in the midst of the last March and the pandemic, you knew every day was going to be a wild ride. But you expected it because it was happening. Right now, however, we're not there. We don't have those high expectations, so I have no expectations. So you got to keep that in mind as you're trading. As a trader, that is your main concern here, is to stay focused, no expectations, and whatever happens, happens. And we've been very lucky the last couple of days. Some of the new folks have been with us because of we've gotten 2 trades. They weren't much. The market's been very nice to me, considering you folks are coming in here. And things that we do as far as the teaching, calculation, we show you the setups, and you can use the same ideas and concepts in other markets as well. How we find them, why we find them, what we're looking for when we find them, and all those different kind of ideas. We are focused on the education is focused on some concepts and ideas that you can obviously take to other markets as well and use them there. But we like to focus in on the S&Ps because they trade well technically with the concepts that we teach, and it gives us a fair chance to make a little bit of money every day. That's we're not. When the markets were ripping around, like I said, we have a 2 to 3 point stop these days with the same profit targets. Yesterday, we tried to eke out a little bit more on one of those trades, and I was holding a trade for like ever. But I took profits along the way. It's not like I never took my profits. I was just holding any extra contracts to be able to sneak a little bit extra money out of them. But the point is that you have to be patient and wait, and then we're going to get opportunities to trade. It's just a matter of waiting for the volatility to come back in the market, because it is what it is. So that's the theme for today: is being patient. Hopefully, we can understand that. All right. So again, any questions, feel free to ask them in the chat box area. We're coming towards the end of our morning session here. And again, just like yesterday, we've had a couple of nights. We were, they've been profitable for us, and we've made some money off of those trades. And if you're following what we're doing, and again, they're very low risk trades. Doesn't always happen that way. We do get run over on some of our trades. This is not. This is trading again. Just because if you've been with us the last couple of days and it's kind of worked out naturally and nicely for us, doesn't mean it always happens that way. I'll give you that disclaimer right away. It doesn't happen that way all the time, but last couple of days we've been kind of lucky. And like I said, we focus more on the morning hours. We think we get good opportunities, good ebbs and flows. The market trades well technically for us. As the day goes on, it gets a little bit more different. The opportunities are different than they are in the morning. The volatility is a little bit different. So kind of keep that in mind. And again, feel free to ask questions, comments, any idea, anything that you might want some better explanation on. Anything, ask away. Nothing wrong with asking questions. But like I said, we're coming down here to the end of the morning session, so things are going to be a little bit less excitable, unfortunately. Trades are. These are all things that we discuss, and if you're a little aggressive and you're looking at the 60 to 61 to 62 areas, a little bit of support. Again, there's different risk levels for each of these trades, and of course, the work that we do, we explain those risk opportunities for you. And you have to make a determination independently as to what trades you would like to take. And again, the reason that's being is because everybody here trades differently. No two people trade the same. And everybody has different risk tolerances. I can tell you that when I was trading on the floor, I stood and worked and traded with a lot of great traders. And I can honestly tell you, I can never do some of the things that some of them did. I knew what they were doing. I saw what they were doing. I could never duplicate what they were doing, no matter how. I just couldn't do it because this wasn't my MO. And so you have to find your own. You have to, find the trades that you feel comfortable taking, the trades that you recognize, visualize, and then learn how to execute them, and then to take advantage of them. So those are the trades that you, as an individual trader, should be looking towards to try to find and trade, instead of trying to trade what I do or what anybody else does. You have to find the ones that you are looking for and trading and can comprehend and can find, right? Those are all aspects of trading. And not only is it the setups that are there, but you have to be able to recognize it, find it, understand why it might work. And then obviously the second part of that, once the recognition part is done, is to execute the trade. And look, I've recognized a lot of trades. Do I take them all? I don't know. It all depends on how I feel like trading it, how much I feel like trading. I trade less riskier trades as the day goes on because I'm up money and I don't want to risk it. Yeah, those are all questions you have to ask yourself as a trader. We try to explain the risk tolerances for each of these trades and what they mean. And again, not every trader has to take every trade that's available. You take the ones that you feel comfortable finding and then feel comfortable executing. And then that way, as you, the more confidence you have in finding those trades that you like, then the better you'll become at trying to execute them and trying to maximize profits against them. So that's what we're doing here. on an everyday basis, whether it be the education part of it or the room. That's what our trading room here. So if you like the banter, I know sometimes it's hard to listen to Brad. Dad, I will tell you. But it's also hard for me to talk constantly all the time. That's why I like, you sharing ideas and thoughts with me and chat so that I can have something to talk about, especially when things are slow. It's a little bit more interesting when things move around a little bit. I can have things to talk about, and some people think I'm not trading. All these, everything comes into play. Anyway, it is what it is. All right. Again, we dipped down we talked about this before, our settlement price. The settlement price here is at 64 even. It does seem to be one of some of our traders' nice trades that they like. It's also a trade that we discuss in our education course, but it's one of our more riskier trades. Again, it all depends on how much risk each individual trader wants to take. And that was a little of an opportunity there. I gave you, when I said 61 to 62 area, a little bit safer trade. Doesn't mean that the 64 wasn't going to work. It just means that you would have probably had to double up with the 61 or 62 area if you did take the 64 here. But the 64 worked for you if you did take it, and you got a nice rotation off of it. And we do have different levels of support areas that the market creates for us, and everything that we do here is based on what the market is telling us. We are definitely not trying to make things up. We let the market kind of dictate our trades for us and where we're looking for and what we're trying to do. All right. So everything is market driven here. I don't make anything up. It's based on the ebbs and flows that the market tells us. And anything, like I said yesterday, anything I do say as far as trades are concerned, opportunities is something that some of our other traders who have taken our education course have already hopefully could see the same thing. All right, well, we're getting a little mid-afternoon move here. Gotten a little bit surprisingly, something's happening, right? I said a little support right in this little area here. If you're a little aggressive, next, but the better support level would be down at our first support level there at the 54 area. Again, it all depends on how aggressive you want to be. Could you have gotten short? I could have gotten short here below the 68 if you were a little aggressive there, based on what the market is telling me and why. And we come back down here. We're coming back down here. It's going to test our pivot area here. Let's see what it wants to do. Again, if you're a little aggressive, maybe you're taking this as support. If you don't like the price action, then wait for the 54 area. If you've gotten short, maybe, well, again, nothing up until 68 area there. Could you have gotten short anywhere? But that was earlier, not now. So the 54 is our next good support level. Bonds going up here a little bit. They've been kind of, again, they're a 156 handle, so they're not really doing anything. They haven't done anything for quite a while here. They're just in a range of themselves. They're kind of also consolidating here. The talk there in the bond market was a fear of inflation, but, you know, I don't know if that's happening or not. You know, it is what it is. Hard to interpret what that means, by the way, because you know bonds usually go inverse relationship to S&Ps. S&Ps have been rallying. Bonds have also been kind of. Well, they broke first, and we were breaking last week until now. Now in this rally, the bonds have not been doing anything over the last week or so. The market is kind of testing the 61 area here. This is our pivot. See what it wants to do right in this little area here. Trying to see if it's going to continue to break. But again, if it is, our 54 area would be our next good support area. That's where our best support is right now. Obviously, there's some different price action opportunities, and everybody, you know, they all have their intrinsic risk within them. Given the market, if you're looking to get short, anything around the 68 to 69 area and anything above 72, you want to be out of any shorts. Well, you're talking about why the market would move at this moment in time. And like I said earlier, I was reminding you that the fact that there's going to be some Fed speaks during the course of the day. And one of those Fed speaks, Kaplan, threatened to withdraw some accommodations as the pandemic ends. And obviously, the market is very sensitive to some of these policies that the Fed has been implementing to keep the market um, loving their ideas or keep the market going up. And the Fed's policies have been attributing to the rallies, obviously, and the fiscal policy that's coming out of the government. So when we told you this morning that they're going to be talking, and that's what market kind of took a little bit of a pullback here based on the fact that Kaplan did say that some accommodations might be withdrawn as the pandemic ends, and that it's putting a little bit of a scare into the market. And again, we talked about buying the 61 area here, and that being our pivot, and we're getting a nice little rotation here off of it. You just had to work it there a little bit. That one did not happen quickly, not as fast as some of our other trades. I know, sorry, but it is rotating here very nicely, and we're getting a nice little move up here off of the 61 area. We suggested that would be a little bit of a support area and a nice rotation off of that. So that was a little bit 60. The earlier pivot off of the 64 was a little bit more risky, but this one, like I said, a little bit more, a little bit safer. And if you did partake with a little bit of a support area there against the 61, then it's a price action opportunity. Again, we include price action in addition to the levels that we go out. We've had a few price action opportunities if you were trading with us. I can't mention them all because it wouldn't be fair to some of our traders who have taken our education course. I mention them afterwards, like the Salmon price, and I did mention this 60 to 61 to 62 area would be a good support area, and it has their reasons, but it did work out very nicely for us. And again, it was just a matter of being a little bit patient and working the level. And we got, again, 2 to 3 point stops. You're getting 2 to 3 point rotations on let's just keep it at 2, considering how slow it is. And when markets do get a little bit crazier, I mean, when last March, when the markets were really going crazy, we had 10-point stops with 10-point profit targets, and we were getting them both ends. They were happening very fast. As you remember, if you were trading a year ago, things were a little bit nasty. A lot of slippage. I love that word. A lot of slippage was incurred, but it was happening. And, but as long as you understood the risk, I mean, this is what I keep trying to tell you. You have to understand risk. That's what we're here to try to explain to you, the risk sometimes of what is happening in the market and how you can manage it, because that's the important part of what we're doing here. And if anybody has any questions, good time to ask. We like questions. Okay, so again, if we need an explanation of why, what we're doing, how we're doing things, hopefully I've tried to explain things as best I could here with these moves. This little end of the morning, early afternoon trade that we, again, the dynamics of trading in the morning versus the afternoon is completely different. And we try to focus more on the morning hours for many reasons. Some of our traders do have other businesses who like to trade in the morning and do their thing in the afternoon. Others just like the afternoon off. Again, everybody's got different things, but as far as we're concerned, we feel that you get dynamics in the morning attribute better to our methodology than they do in the afternoon. So we focus more on that. And there's also different times when we have to remember what type of market we're trading and how that affects our market as well. Anything I'm talking about here, we definitely discuss in our education course to help you become a better trader. All right. As we're coming here to the end of the session here, that again, trading is going to continue, obviously, and like I said, you have our support levels here on the downside is 54, 48, 38, and 31. Maybe what this Fed speak is going to create some volatility here to the downside. Maybe it'll scare the market a little bit. Spook the market, that's what I wanted to say. Spook the market a little bit because we are at new highs, right? And maybe a little profit taking would be in order, but who's to say that's going to happen? The market has to let us know. I think if we get below, well, I don't know. Really, unless we get below 4,000, there's not, there's different areas of support like we have here, but we'll range bound here in a bit. I can't say when it's going to open up to the downside. That I can't tell you yet. I'll have to let the market work a little bit first. All right, so we've obviously just come kind of hanging here for a bit. Maybe that's it. Maybe that's the biggest break we're going to get. Who knows? But like I said, you have to be ready for it, waiting for it, and let the market kind of dictate the opportunity instead of you trying to go find it. Patience obviously is important. Waiting for the market to, create the opportunity for you is important. Obviously, recognition of the trade is what you're looking for, where you would want to buy it, why you'd want to buy it, or why do you want to sell it. And again, that's what you do here is you wait for the opportunity. Hopefully, some of you have taken advantage of our trades today. Yesterday as well, for those of you who've been joining us the last couple of days. They've been kind of working out very nicely for us. But hopefully again, I like questions, so this is the time to ask me some questions. Things are slow, so it's a good time to ask. And I've tried to be as I tried to explain things as best I can. I'm not trying to really hide anything here. So I've been trying to tell you where, what the trades are, what I'm looking for, explain to you why, and hopefully you've been, been trying to be, what is that word that I'm looking for, that when you're explaining everything to everybody. I don't know, I forgot. I'll remember in a minute. All right, next good support level we have on the downside is down at the 54 area. Again, I don't know if we're going to get down there or not. All right, as the market trying to figure out what it wants to do, we got resistance around the 68 area, and anything above 72, you want to be, well, if you want a tighter stop, anything in 71, 72, you want to be out of any shorts. So if you're looking to sell it up there, 68, 69 area, anything above, let's say 72, you want to be out of any shorts. If you're looking for that kind of rotation there,